What's up, you guys? So in today's video, I'm going to be showing you guys how to find stocks to trade, similar to this right here. So stocks that are uptrending, and we basically are going to be buying the pullbacks, and we're going to be waiting for some type of confirmation on these stocks. We're finding stocks that are overall good companies because they're based on the technicals, they're uptrending stocks, and then we're going to basically be buying when we get down to this green SMA. So this green SMA is in TradingView, and you can get there by just looking up simple moving average right here, and then exponential moving average. So it's blue, and I use the 45-day EMA and 200 SMA. Those are those two lines that you see here. Let's get into the Finviz screeners so you guys can see how to actually do this. So what I do is I first go into the exchange, so it's going to be NASDAQ, and then we go to 50-day simple moving average. You want the price to be below the SMA 50, and you want the price to be above the 200 SMA. So that way, what you're scanning for is stocks that are above this green line but below this blue line, and usually they should be uptrending if they're like this, but not always. Next, we want to do $10 to $20 on here. So it'd be $10 to $20 over 104,000. Average volume, there's different volumes. There's current volume and relative volume. I use the average volume, so over 400,000. Country is going to be USA. It's just 6 screens, and as you can see, we have a total of 7 stocks. So I'm just going to go through these stocks with you and tell you why I like certain ones versus why I don't like other ones. Right here, as you can see, this one I don't like because it's super choppy. And as you can see, the green SMA, if you look at right here, this is about 272 days. In the past, in this amount of time, the 112 days, it was actually going downwards. Now we're starting to uptrend a little bit, but as you can see, this high, and this high, this one's lower than this one, this one's lower than this one, so we're not really uptrending anymore. You could say that from right here to here we were uptrending, but after that we started getting lower lows. So that one I don't like because it's super choppy. Look how many gaps we have. Not something I would want to trade. Go to this one. You can see I really do like this one because we have some gaps in the stock right here. So as you can see, we have some gaps right here. We have a gap right here. This is usually overnight that this happens, which is a risk that you carry when swing trading, so just be careful about that. But again, we're trading around $10 to $20 right here because of the fact that, it's cheaper. You can trade it with a small account. So if we take this info line, right, currently we're priced at right here, but to the highs, that's about a 27% increase. So if we invested $100, we would get $27 back, which is a good amount if it were to actually play out the way we would want to. So this is what I would do. Basically, I would put my stop loss maybe right here, and then I would put my take profit right around here, and we would just buy in and see if we get to that level. I would basically set alerts up so that way you can see if it's increasing. So I would have alerts right here, and then just slowly get into it. Keep my stop loss right here for this one. I would probably have my stop loss right here. This one, and my stop loss, I'd have it right around the same area, right underneath this green line probably. But as you can see, your position would change each time for that. But that's how I like to trade, and I've been trading for maybe 2 years or something. So maybe even more than that, 5 years. So I know what I'm doing in this market. As you can see, before we were kind of flattened out, and then we were right here. But again, we're just looking at the 4-hour chart, maybe the past 438 days. So pretty much just the past year of all these stocks. So this one I really like. Let's go to the next one, ARQT. Now this one I do not like because of the fact that it's so choppy. I mean, if you look closely, it just looks so choppy compared to the other one. And it's kind of like AAPD where we have lower highs. So if we look at AAPD, we had those lower highs, right? Well, same thing with ARQT. We're still getting those lower highs, which means that we're not really in an uptrend. Yes, the SMA is up, but it's just so choppy. You can see so many wicks on these things, high rejections, and I don't like to really trade that. I like to trade stuff with candle bodies. If you see tons of these lines, it's probably not the best stock to trade. You want your charts to be clean looking. So that one I wouldn't trade. EZPW. Let's check this one. So this one looks really good. It is a little bit choppy. In here, it's kind of choppy. but overall we're respecting this green line and we're overall making higher lows right here. This one is higher than this one, and as you can see, it just is like a staircase. We're really looking for that staircase and cleaner charts. Now with this one, you could, if you were to buy in, let's say, you know, as time progresses, so over the next like 27 days, we might be able to see that this EMA starts to come down a little bit more towards here, and then once price breaks that, that would be confirmation to get in. And let's say it was like right around here that price broke, we could look at getting about 14.62% of our profits. And because the price is so cheap for this stock and we have such a nice chart, we're really taking advantage of having a cheaper company and getting a lot more percentage profit off of that. Although right now we are kind of testing this SMA. We could hold, we might not, you know, it could bounce. That's why I really like to wait for confirmation of higher highs, again, setting, you know, alerts above this area. So that way we can slowly buy into this and still make a good amount of money. Okay, so let's check the next one, EZPW. We have GCMG. This one I would not trade. I don't know why it came up on the thing, but as you can see, this is a perfect example of what could happen to the previous one that we just looked at. You know, it was testing this and then we dropped under the SMA. And so now that we're below this SMA, the trend is now in a halt. You know, it could start to go down, it could start to go up, but really you want to start trading, you know, you price goes like this and then we start going, you want to be trading like right here where you see that green line. It's respecting, price is respecting, it's making that staircase, and you're just trading every time it gets close to this green line, like right here, and we jump above the SMA, then you get in. And as you can see, you would make, let's say you got in like right here to like here, and you can even use the trailing stop loss as well. You would have made like 11.82% on that, which is really good. Or you can sell like when price goes below this blue SMA. The next one, which is KALV, Calvista Pharmaceuticals. This one I would not trade because it's kind of in like a sideways pattern, although maybe you could trade this. How you could do that is just looking at like the support and resistance. So as you can see, this is our support and our resistance. So if we come back down here, if we come up to this yellow line and we can see price bouncing back down, so let's say it goes like this, comes down, comes up, and then we drop back down, we can see like price kind of consolidating right here, and then we push back down. You know, once the EMA is pretty much done, say the EMA, this blue EMA is like this, and then we drop under this, and then it comes down right as we get that confirmation. So for example, like right here, we got kind of close to this yellow line, and as soon as we drop back down, could have targeted this yellow line. So that's more of like a sideways trend, which I don't really like trading too much. Yeah, let's go to the next one, TV. For some reason, these are all pharmaceutical companies. Yeah, this one I would not trade because look, there's not even really like clear support and resistance. I mean, this is support and then this is resistance. You know, if we were to wait for price to go up, you could go to like a lower time frame and try to wait for price to break this. But even if we go even lower, you're gonna have this resistance right here. If we wait for confirmation above this blue EMA, our only target that we have is like right here to here. So in my opinion, the best ones that we have are ALHC. As you can see, really nice. And if we break above this, we can make a good amount of money from that. And it's a clear uptrend. It's been steady. It's been going up. The past doesn't always have to repeat itself, but it definitely can. And it gives you a better like idea of like more trustworthiness of the stock if it's in this overall pattern of a staircase. And the other one was EZPW, this one. So we're really looking for stocks just like these two. If price does consolidate here for a little bit, like just like it did here, as you can see, this is the consolidation area. But once we pick back up and we're clearing this past previous high, you know, we can buy in and expect to make, you know, a good amount of profit. And you can also use the RSI as well to see when it's oversold. I don't have the RSI on my chart right now. You could see that once price becomes oversold or in these areas, we can look to sell. You know what I mean? Instead of just targeting this previous high, we can look to sell when the RSI gets to above 70 or like right around 70. And even like right here, it tested the 70 level a couple times, even right here. Or you can just sell, like you can just use a trailing stop loss and trail the stop loss. So you can just if this was your stop loss, you can just, let's say we enter right here and price is going up and we're just following price as it goes up and just moving our stop loss. And then eventually we would get stopped out, maybe around here or something. You have to be really careful with that. And I don't know if that's the best way. But yeah, guys, that's basically how you can scan for stocks that are good for swing trading, and really look for those ones that have uptrends, you know what I mean, that are clear uptrends and that are clean charts like this where it's just constant higher highs. Price doesn't have to keep following the past pattern, but it definitely can. So I just wanted to show you guys that. Make sure to log into your account on Finviz and you can save this scanner, and each and every day you can find swing trading stocks. And if you want to trade higher cap stocks or anything like that, you can also go to market cap, go to like large, and do the same thing with larger cap stocks if you have the budget for it. Then you can add it to your watch list and just like set alerts for higher highs, and you can just sit back and wait for the alerts to come in. That is basically how you can trade. Again, follow these clear uptrends and staircases and you'll do really, really well in the market. Thank you for watching, and I'll see you guys in the next video.